How's it going, everyone? Welcome to the Trader Hotline. How's everyone's night doing? How we doing? How we feeling? Welcome, welcome, welcome. I was just talking to Nick before we get on, and we're gonna think about a jingle, a little song to play before we start. I'd love to get Nick on the line and have him actually sing it to you guys. Welcome, everyone, to the first live stream, Trader Hotline, the trading intervention channel, where you get to call in, call the number on the screen, top left of the screen, call in, leave a message. We'll review your message, and if it's a valuable message that will provide value to the people that are watching, we will phone you in, have you be a part of the show live, and have a conversation with me in real time. Thank you guys for all being here tonight. Thank you for being part of the first ever Trader Hotline live stream. These live streams are live, but they will be recorded. They'll be reposted, so you guys can always go back and watch them. We need decaffeinated coffee. We're definitely gonna, once that Insiders Coffee Co. comes around, this is gonna be a great time for Insiders Coffee Co. 8 o'clock at night. How's it going, everyone? Welcome, welcome. Welcome to the Trader Hotline. So we've already gotten some nice calls this evening. Nick's been in the background reviewing them. We already have a few lined up. We're gonna wait a few minutes, let some people jump in. We'll start bringing some people on the line, maybe around 8:05. About 2 more minutes. Allow some people to jump on in. Coffee business is underway. Yep, it's coming, Camilo. A lot of work, a lot more than you would think. Make sure to press that like button for me. Subscribe to the channel. I think we were able to hit 1,000 subscribers on the channel. If I'm not, let me double check. I think we were able to hit the 1,000 subscriber mark in the first day, which is pretty cool. I appreciate that, guys. Hopefully YouTube picks it up. That 1,008 subscribers. Really cool. I already have some posts and full videos to post tomorrow from our conversations we had yesterday with the Discord community, with the trading community. We did a little private stream with some of the members. So we already have some good content to share with you guys. The idea is sick. Appreciate that, Mike. Should be fun. You guys are going to be able to listen in to other people's conversations. The whole thesis of this stream, the whole thesis of this idea is to have people be more open about their situations, their trade ideas, or their situations in their trading, or what they're struggling with, and be open and vulnerable about it. Be willing to talk to me about it. Be willing to, talk to others about it, and just sort of change the way we are online. Get rid of the ego. Get rid of the BS, and have a good time. Talk to others. Converse as we normally would. 99% of the people online, you may think that they're, they may talk a big game online, and then the minute you meet them in person, they're just a normal person, just like everyone else, right? And so the goal of this channel is to bring that back and just bring normal conversing conversations back, which I think is going to be a lot of fun, and I look forward to it. Look forward to it quite a bit. This is going to be big. Yeah, it's going to bog down my RAM even more. Yeah, you're probably right about that. Going to have to get like a supercomputer soon. All right, so it's 8:05. Nick, we can start Actually, hold on, Nick. Before you do that, I got to make sure I open up. Let me go ahead and open this up so we can get ready to take some calls. All right. Enable. Allow. All right, Nick. So I should be good on my end. Let me know whenever you got someone on the line. So, Nick. All right, hold on. Okay. Okay. Nick, I don't think it's calling me on the go high level. If you could try one more time, Nick. Everyone behind the dip at open. Yeah, crazy dip buying this morning. Crazy bounce off the lows. Let me make sure we are not having technical difficulties. We worked this all out yesterday, and it worked just fine. But while we wait, okay, here we go. Looks like we got it. Hello? Hold on one second. I have the phone up. Bear with me, guys. There's always a little bit of a technical difficulty out there. All right, so while we have some technical difficulties, we'll just hang out and talk. I have it says that I have a call, Nick, but I don't hear it. Yeah. Are you able to call him back? All right, hold on. Before you do that, let me make sure that I just ended the call. We'll do it live. Let me go back. Let me go to go high. Let me just sign back in real quick. That would suck. We'll figure it out. All right, so enable, allow. Microphone's on the right microphone. Got the AirPods connected. AirPods are connected. AirPods, good. All right, let's try it one more time. First call, please be SPX zeros. I wrecked my account. That's a great thing to call in about. Hello?
Hello.
Hey, how's it going? Is this Josh?
Yeah, it's going good, man. How are you?
Good, Josh. So what is your question today? I'm going to go ahead and put it up on the screen, and then feel free to jump into it. What's the question you got today?
Well, I know you're going to have amazing advice, so it wasn't so much of a question as like kind of giving you what I'm going through, and then you can respond. So basically, you know, I'm on year 5 of learning, and like it really only got too serious 3 years in.
Okay.
And I'm trying to grow a small account, and I keep blowing it up.
And I think Nick told me it's like how small is small?
So small is $100, and you know, I've gotten it up to $400. I've gotten it up to $600, $700 before, which is incredible. But then like a couple bad habits come in, and I get too large in a trade and am not ready to take the loss, and you know how you just sit there all day and watch your account go to zero. But I've tried to do this many times, and every time it's like, dude, I got it. I know the approach, and sometimes I just have trouble the morning my funds settle.
Yeah.
Kind of just doing something stupid or impulsive and getting away from my plan. And obviously with $100,
yeah, you don't have much wiggle room.
There's no room for error.
Yeah, so I guess really where I want to start with this, Josh, is what are you trading? Are you trading options?
Mostly QQQ, zero DTA, zero
DT.
slow sprint.
Yep.
I just like QQQ.
Yeah, I mean, so here's what I'll say, Josh. $100, it's really hard, right? Like starting at $100 it's almost so small that it's near. I don't want to use the word impossible, but and clearly you've grown it, and you've grown it to, let's say, $500-$600, but to grow it to those levels, to grow something from $100 to $600, you had to have been taking some really significant risk, right? So you probably were taking position sizes that were half of your account, right? Or let's say 25% of your account, or maybe even your whole account is in a singular position. And so this is just not the way to be sustainable, right? And so really where, Josh, I think where the problem stems from is, I know it's not, this is truthful advice, and that's what Trader Hotline's all about. It's I'm going to give it to you truth, and I'm not going to sugarcoat it. And the truth is that trading with $100 is just really going to put you behind the, sort of behind the, offsides. You're going to have to take really big risk, not in terms of dollar amounts, because it may seem like, oh, I'm only taking, $100 worth of risk on this trade, but that $100 is 100% of your account. And so that is just going to be really hard, all right, to be able to build that, and you're building habits of taking really large risk in terms of your account size. And if you get wrong one time, right, you had wrong one time and your account's blown. So what I would say, all right, and my personal advice to you, Josh, is don't keep putting in $100. Just stop doing that. I don't think it's going to be long-term a success for you. I don't think you're going to be able to keep putting in $100 and turn that into something that's really big without taking and learning bad habits, which is putting in your whole account to take a trade. I think I'd rather see you paper trade, learn, all right, be disciplined, learn your technicals, learn your setups, continue to understand how to trade and find your system. And then, whatever you do on the side, whatever job you have, right, I would save up while you're learning during that period, and then say, all right, I've paper traded successfully for 3 to 6 months. I'm really understanding what I'm doing. I've saved up, let's say, some money that I'm willing to now put into a trading account, and I can put in, I would say, $1,000 would be where I'd want you to start. Then you can take $100 position sizes, and that's now only 10% of your trading account. So if you're wrong a few times, you're all right. And you're still only risking $100, right? It's the same risk, but at least you're not just opening and blowing up accounts. Also, this is not something that I've done personally, but I do believe that maybe if you don't, if you want to trade the QQQ, which is basically the NASDAQ futures, prop firms could be a good place for you to check out, right? And sort of use, let's say, a prop firm account that may cost you $100, but you get the buying power of a larger buying power to not be blowing up your account right away. So all in all, Josh, the advice that I have for you is don't keep putting in these $100. I would personally, I would probably blow up a $100 account, Josh, to be quite honest. Like, you have to put your whole,
save it up.
Yeah, absolutely. Better off save your money, learn, paper trade, and then once you have a really good system in place, then I would you want to be well capitalized. And $100, you're probably taking really shitty QQQ options that are way far out of the money, which are just really hard to appreciate, right? And it's just you're starting in a really tough position. So that would be my advice to you, Josh.
Hey, you're absolutely right about the position size and how much I'm taking when I take a trade.
Right.
Sometimes I can get a nice little 30-cent contract, $30 contract,
Yep.
and it goes to $1. Like, I know that you understand the romance of the idea that I'm trying to do. Like,
Yep.
it's
Totally.
stupid, and it's not the best way to do it, but
it's what we're sold, man. That's what you're sold. You're sold that online that you can turn $100 into whatever, and it's just going to be really difficult. So that's where I'm going to leave it there, Josh. I hope that helped, and feel free to reach out to me if you want to continue to, ask questions. Feel free to reach out to my Instagram or Discord, wherever it might be. And so I hope that this was able to at least guide you in a different direction that may help you long term. All right?
Thanks for everything you do, man. You're awesome.
All right.
Thank you.
All right, Josh. Have a good night, man. All right. I mean, for me, $100 account, man, that's really hard. I would blow up a $100 account. There's no doubt about it. There ain't no way I'm getting $100 to turn into $1,000. And if I did, I'm putting my whole account in a trade every single time, right? Every single time, it's my whole account, $100 in, I'm all in. If I'm wrong, I'm down 50% of my account. It's just, you're really sort of handcuffed in that position. So, if any of you guys out there are in that similar situation, I would say save up your money, right? Do it the right way. Save up, paper trade, maybe like some people said in the chat, which were good recommendations, prop firm at that time to learn, trading, open up a prop, prop firm account and try to learn that way. But yeah, that was a good question. I think, and the great thing that I love about what we just did is, Josh maybe would have continued to do that, right? And sort of just continue to go down that road. And maybe, a simple call like this tonight could make the difference. And maybe Josh goes on to, paper trade for the next 6 months, really do well, right? Have a proper account. Maybe he tries out props and maybe he becomes a fantastic trader. Who knows? All right. And so that's pretty cool. That's pretty cool. So thanks, Josh, for calling in. If you're still watching, that was awesome. Thanks for being vulnerable, getting on live in front of how many people we got here? 300 people live. Really cool. All right, Nick, feel free to bring on the next guest. Let me make sure. I'm going to test one more thing. Yeah, hold on, Nick, before you do that. I just want to test. I got one thing I want to test before we move on to the next one. I'm not sure why. Okay, all right. All right, 1 second. Let me just play that. Are you enjoying the show? Are we enjoying the show? Smash that like button. Subscribe to Trader Hotline. Let me just test one thing here. My Python script. If you guys believe it, I'm running Python scripts for all this stuff running on the screen right now. Can you believe that? Python. Who would have thought that this guy right here is writing Python scripts, even though I'm not writing them? Who's writing them is Claude. Claude is writing the Python scripts for me. But unfortunately, it's not working. So I have to figure out why that is not working. So I guess the next stream we'll have to let me try to see if this will work. Hold on. Let me try this real quick. Yeah. Umar, what's up, man? All right. Really good first question from Josh. Let's go ahead and bring in the next guest. Nick, feel free to bring them through. Oh, I think you guys are going to like this one. Hello?
Hello?
Who's this?
This is Carmine Rosado.
Oh, how we doing?
How we doing?
Let's put him up on the screen. Carmine, OG trader. What do you want your title and description to be? OG futures trader. How about that? Let's put it up on the screen. Topic. What's our topic today?
Topic is trying to be right.
Trying to be right, or let's say anticipating. How's that?
There you go.
All right. So what do we got?
All right. So February was a very emotional month. If I look at a lot of my losses, which I did a lot of reviewing over the weekend, a lot of my losses are me missing a move. It's a clear trend day. I reversed the trend, which I'm more of a reversal trader, and that's typical for me. But what's not typical is after I try it for one time, I can't throw that idea out the window, and I try it a second, third, fourth, fifth time. And then after that, it's just me trying to be right, and I lose all objectivity, and I lose all analysis, and it's now just at the point of me buying or selling for the fact that I want to be right and make money and make back the losses. Right. And I know it has part of the volatility in February and all the uncertainty. And if I look back at my data, it's only on trending days.
Yeah. So I want to say this is like a two-part thing. The first thing that comes to my mind, Carmine, is for me, when I try to do reversals, like let's talk about the technical side of it, like sort of talk about like the strategy side of it first, and then let's talk about the emotional side of it, right? So the first side of it, which is like the technicals or strategy side of it, and I know you have your own strategy, which I would never put in question because you're a great trader. But you know, something that I would add to what you look for is like a reclaim of something, right? Before trying to reverse the market. Is that ever something that you look at? So like for me, if I'm going to go ahead and look to long, a downside market, let's say we broke below a previous day low and you're continuing lower below it, or let's say you're below VWAP and you're continuing lower in a downtrend below it. Is there ever a situation where you say, hey, okay, I've seen something on the book map that says, okay, I think buyers are stepping in here, but before I take this long, I want to see a reclaim of the previous day lows, or I want to see a reclaim of VWAP, or I want to see a reclaim of, you know, some structure that's on the intraday chart. Is that ever something that you've thought about? Just a question for you.
Yeah, for sure. So that's if I remained objective and followed my strategy, I would typically do that if I'm trying to reverse a serious trend.
So that is part of the strategy.
But my issue is not following the strategy
not waiting
and
for it.
Getting super emotional and not waiting for it, because I feel like if I don't enter right now, then I might not have another time to enter. And then after the fourth, fifth attempt, I got no ammo left for the day.
Yep. Yeah, so I mean so if we can agree that the right call is to wait for the reclaim, then I agree with that. And that's something that I will always look to wait for too, but also fail at it myself as well, sometimes waiting for it, because us as traders are just always wanting to anticipate the move happening, you know, trying to catch the exact reversal point, anticipating, trying to get the best entry point, and you know, just going for it before maybe some kind of key reclaim level. And then once we're wrong that first time, right, and then it just becomes that it's really what we talk about quite a bit is like the tunnel vision. You can't get your mind off that one idea. You can't get your mind off being right about this idea that you were wrong the first time on, that you end up being wrong the second time on, and then wrong the third time on. And I think the only way, Carmine, you know, is to have some type of a rule, which you have. It's like, okay, I've tried something twice, and if I've tried something twice and it doesn't work, you just have to say, whether this works out or not, at this point, I am no longer going to be able to catch this trade, because I tried it once, I tried it twice, and, you know, I think we all know, and I think where this stems from is I think we all look at the chart and we say, yep, I know exactly when I don't take this, right? The time that I don't take this trade is going to be the time that the chart does exactly what I want it to do, right? So I'm going to try to long it once. I'm going to try to long it the second time. I'm going to stop myself the second time, because that's my rule. That's my discipline to say, try something twice. If it doesn't work, I just got to give up on it. But in the back of your head, you know that, you know, if there's a little thing going on in your head that says, I know the third time that I don't try this, it's going to play. And then a lot of the times that's exactly what we see. And so that's just, man, that is such a difficult spot to be in. You know, it's that situation where you just can't stop yourself from taking that next attempt. I mean, Carmine, I think you know best. I think the only way to stop that is there some kind of a disciplined rule, right? I don't think there's any other way.
I usually have a three losses in a row. I usually throw the whole idea out the window, but sometimes it's hard to follow because after 3 losses, you feel like the fourth time's the best time, and if you don't enter and it moves without you, you're gonna sit there,
and watch it happen.
Exactly, but if you're just patient, I mean, a good lesson like today, I mean, just being patient. I don't know if you saw the S&P, it reclaimed above the pre-market high and supported it. Yeah, and PDL and even the pre-market high, and it supported it. And if you were watching the order flow there was even significant buying. And I don't want to say I missed the rally, but I waited patiently for a pullback. And instead of me chasing the rally, I waited for the pullback patiently in the P. So just being patient.
Where Carmine's talking about is right here. We had Friday lows right here, and today a great trade developed after waiting for the market to reclaim that previous day low, which is right here at this 681.64 level. So a really nice reclaim long above PDL, and this is sort of what we're talking about. Like, let's get a reclaim above that key level before we take that position. So. Yeah, I mean, Carmine, I think, I think for the viewers and for, I guess, hey, it's interesting to be giving Carmine Rosado advice on Trader Hotline, but I think we know that the system side of it is wait for a reclaim, don't anticipate something, right? And the second side of it is have some kind of a rule for yourself that you're going to have to follow no matter how painful it is, to then probably watch the chart do exactly what we expected. But you know what? That's the pain that's the price we pay, and the pain that we have to sit through because we anticipated it too early and we took losses before the real setup actually occurred. Right?
Yes, sir.
I appreciate you calling in, man.
Talk to you later.
All right, man. Have a great night.
Bye.
All right. Conversation there. That's something that I struggled with a little bit last month. Actually, yeah, pretty much end of last month, end of February. Just anticipating moves, not waiting for them to set up correctly. Basically not waiting for price action to develop, just going for it because, and you know what? I think this is actually a problem that a lot of veteran traders deal with, like myself, maybe like Carmine, and maybe, let's say, even Umar, who was in the chat earlier. You're so good at what you do. You've seen yourself perform at such a high level. You've seen yourself make 30,000, 50,000. I've watched myself, and I'm not... Guys, nothing on this channel will ever be a lie, okay? I am going to pour everything in the truths on this channel. I have watched myself make $100,000 in a single day. So when you do that, right, you become, you feel invincible, right? And then the next time you come back in, you're like, I know what's going to happen. It's almost as if I can predict the market, right? That's what starts going on in our brains. And that's just, right when that starts to occur is right when you get humbled. Right, that exact moment where you start to feel invincible, is when you start to get humbled. So it's actually, I think, a problem that most veteran traders go through, like I said, because they have seen themselves do well for so many years and start to think that they are, able to predict the markets when, a lot of the times we can't. Right. All right, Nick, we ready for another one? Okay. All right, hold on. All right, so Nick's got the next caller coming in. We got we're going to be getting Jason on the line. Jason's going to be coming on the line, and the question is going to be roughly about identifying chop in the morning and market structure versus market direction. But let's hear it from Jason himself once he gets on the line here. All right.
Hey,
Vince. Jason, how you doing, man?
Good. How's it going? Chief
Good,
Dougie
thanks.
Trades here.
Who? Say that again.
Chief Dougie Trades. Chief
Oh,
Dougie
how's it
Trades
going?
here.
How's it going, man?
Good.
Nice
Listen,
to. Thanks for calling in.
Yeah. I don't want to take too much of your time here. I know I want to get the callers in, but
Yeah.
I really wanted to talk. It's a two-parter question here.
Okay.
We have been getting chewed up by Chop, so.
Yep.
I know you have something like 15 minutes that you can say, okay, this is Chop. Don't trade this crap.
Yep.
You know? And the second question is about what's more important to you, market structure or market direction? Like, what's the market doing at this particular moment? Like, for today. Like,
Yep.
I had the market structure going down, but then the market direction said, nope, we're going up. You know,
Yep.
so I should have been having plays towards the upside. So what's more important to you as far as priority is concerned?
Yeah. So first part of that question, I think we can always anticipate chop within the previous day's range. And so I think that's something you can always put on your charts is say, all right, I got the previous day lows and I got previous day highs. If we trade within that zone and where let's say we saw chop within that zone the prior day. And so let me just go ahead and pull up the charts. Why not? We can use interactive examples here. So if we're looking at this chart together, we can look at this and say, all right, we got Friday's highs and we got Friday's lows, right? So we have this Friday day of chop. And you can say coming into the day, like we did this morning, we could say, all right, if we trade back within this range, if we reclaim this low and trade back within this range, we could probably expect similar price action within that zone, right? So we can see Friday chop, we chopped again inside that zone, right? And so that's what I would look at first. I'd say, all right, I'm going to anticipate chop today if we trade within the previous day's range. If we get back within it, then that is back within a sideways channeling range. If we stay below the previous day low, then that would be a market structure to the downside, right? And a continuation setup because we have previous day lows, we're turning those into rejections, right? So you're continuing in a direction. That's your market structure to the downside. So outside of the previous day's range, I would say, yes, we could have continuation. And then inside of the previous day range, I would say, I'm going to be cautious of chop, right? That's the first thing I would do. That's like a really easy way to try to mark that out and anticipate it. Now,
Okay. Great.
Your second part of your question is market structure versus market direction. So market structure, I would say, is more of like a macro look, whereas market direction is more of like a micro look, an intraday look. So today, like you said, we definitely were looking for market structure to the downside, right? We had these highs, we had these lows, we broke Friday's lows, and we were going to open today under Friday's lows, right? And so that is bearish market structure, which is exactly what anyone would game plan for coming into the trading day, right? Because that's just what they saw before the market opened. So that's great. There's nothing wrong with knowing that. And that's what you should have been saying, right? But then we use the intraday action, what's actually happening in the charts, which is that intraday trend, intraday market direction, to then decide whether that structure is going to stay in place or not. And so the second that we got above previous day lows today, the bearish structure was broken, right? Because we reclaimed that low. We got back above that. The bearish market structure is no longer valid. And so we have to be able to say on the intraday, my pre-market game plan is, well, we can game plan for both instances, right? But if my pre-market game plan was to stay in bearish market structure, I need to see us stay below previous day lows. If that is happening on the intraday, then I can look for that trade. If that becomes invalidated, then I have to switch up, right? I either have to switch up or I don't trade. And so what I did today, Jason, actually, is the situation where you just say, well, I was looking for a structure to stay bearish. I was looking for the rejection of previous day low. We reclaimed it. Wasn't really part of what I wanted to look for today. Why? Because it was putting us right back into Friday's range. Right? So as soon as we got above previous day low today, we traded right back into Friday's range, which is right back into the shit show that you and I know all too well, right? And so I just said to myself, that's it. I'm not doing it. I refuse to do it. I lost $15,000 last month trading in this shit. I'm not going to go do it again because I can't help myself from trading. So as soon as we reclaimed that low today, the day was over for me, to be quite honest. It was over. There was a nice long today, but that wasn't what I wanted to see. I wanted to see us outside of that channel. I wanted to see us stay bearish under PDL. And some people may say that's bad because you should trade everything. I say if you don't like an area on the market and you've seen yourself lose, then you should be controlling yourself, right? Rather than just not being able to control yourself and having to take a trade on the intraday. So I think market structure and market direction are both important. I think understanding that one is maybe a little bit more macro, but then adjusting to the intraday direction is also very important, right?
Okay.
Does that make sense?
Excellent. Absolutely. I didn't take a single trade today. So, because like I said, I had about 4 plays to the downside, and they didn't play out because exactly what you said. I didn't see that break of the lows. So,
yep.
Yeah.
I think that's a win.
I appreciate it.
I think that's a win, Jason. I wouldn't take that as a loss. I'd be very happy with my discipline at that point. I think you walk away from a day like that and say, hey, that was my game plan. It didn't play out. Tomorrow's a new day. I got nothing wrong with that.
Yeah, man. I appreciate it. Thanks,
all right,
Vince.
Jason. Have a great night, man.
You too.
All right. Great question from Jason. Pre-market game plan is important. Sticking to the pre-market game plan is important. Knowing what you're going to look for in an intraday is important. If you don't come in with a certain game plan and you try to flip it, try to switch it up on the intraday, sometimes you can be caught off guard. And so, some people will say you should plan for both, or some people will say that you're a bad trader because you're not trading both sides. I say, hey, if you plan for one thing and you thought it would be an A+ situation and it didn't play out, why start taking situations that you weren't planned for on the intraday just because you're trying to chase money, right? I mean, that would be my opinion on that. From what do we got? My setup didn't show up, didn't take a trade. That's good, man. I like that. I think that's a W. All right. So we're about 40 minutes in. Unfortunately, I realized that I didn't record half of the first question we had tonight, so that's unfortunate. But YouTube will have a recording. We'll just clip them together. But we got everything else on the recording today. What are your thoughts on trading just the futures market? Nothing wrong with it, Some people make a living, right? I got nothing wrong with it. I think lately, if you're looking at the markets lately, I think there has been some big outlier opportunities in equities, right? We've seen a lot of individual equities run crazy, run rampant. While the market has stayed sideways, we've seen outliers in sectors. We've seen outliers in commodities. We've seen places on the market that absolutely have warranted being interested in outside of just trading the S&P and the NASDAQ. So I think that's something that a lot of people should pay attention to and understand is the XLE has been straight up, right? The XLF has been weak. The XLP, consumer staples, has been very strong. You've had stocks like Walmart and Costco go vertical, continue to go vertical. Caterpillar. Has anyone looked at Caterpillar lately? Has anyone looked at some of these industrial names and these consumer staple names just go straight up, right? So there's absolutely sectors that a lot of people aren't paying attention to that are creating opportunities while the market stays sideways. And so if you're, that's the downside of futures, I would say. Like, you're stuck to trading one asset, and when that asset is not really performing how you like it, then you're stuck, you either gotta, do nothing, or, that's the great thing. At least that's where I like equities, is that I can, find outlier situations that may give me opportunity. Yeah, I think we are ready, Nick, for the next caller. What do we got? Price action question. Yeah, we can try to go over a price action question. It might be tough without a chart, but I'll give it a shot. All right. All right, we got John coming on the line. He's got a question on the break and retest in specific about price action. So let's see. I really wish this thing was working. It's not. All right, let's bring him in. John, welcome to the Trader Hotline.
Hey, how you doing?
Good, man. What's going on?
Well, I have a question about when we break and retest our levels that we set in the morning.
Yep.
So when we come back down to a level, are you looking for a specific type of candle to make your entry on your trades?
So, the key thing, that's what I like to call the battle zone, John. So when let's say you have a key level, mapped out. Let's go ahead and bring up the charts, John, and we can do this together. So today is a great example. Let's say at the Friday low a day, right? So coming into today, our key level to retest and to hold was, if we were going to long today, was, all right, if the market gets back above Friday's lows, let's say right here at that 681.64, if we can get above it, right, and we pull back to it, I want to see if we can hold above that level. Now, when I say I want to see if we can hold above it, that's exactly what you're referring to. It's the price action and the candles back at that level, right? So let's go ahead and take a little look at what occurred in that area, right around that area. So we can see, let's just go down to the 1 minute chart together and take a look. I know this is the most minute time frame, but let's go ahead and take a look. So right here, John, is what I would say is the battle zone, like right in here, right? Because what did we do? We broke previous day low, which is right there. We came back down to it, right? And then we consolidated. And this area right here, to me, is the most important area of your day, really. Like if your strategy is the break and retest of, let's say, whatever level it might be, whatever price action ensues after we break it and we pull back to it, whatever price action ensues here is what's going to tell you whether you should take that trade or not, right? And this is the price action that we as traders need to wait to see, right? A lot of us are guilty, including myself, to, let's say, just long on this candle right here, right? So a lot of us say, all right, we broke that level. We're pulling back to it. We've had 3 red candles in a row, and I'm just going to go ahead and take this long right here. No holds, no green candles, no nothing. Just we're back to it. I'm longing it. And so what happens a lot in this situation, John, is the next candle is just another candle right back down through it. You anticipated the trade before any confirmation, and then you just take a loss, right? That happens to me when I anticipate trades. So what do we need to wait for? We need to say, all right, hold on. Let me give this some time and see if we can continue to hold that level. And so what I look for, and I wish I could show this live. I don't have a recording of this live, which maybe I'll try to bring in for, it might be tough when these are live questions because they're sort of on the spot. But if you go back and watch this live action here, right, you would see that this candle right here, right, it was lower. This candle was lower. It got wicked back higher, as you can see through the wick, right? This candle right here went straight down and got bid straight back up. And all these reactions that you're looking at right here is going to be sort of that experience that this is where most traders need to get better. And this is where I think most traders should really focus on is like, I need to understand what price action is doing at my key level. And I need to understand what that, what a defending market looks like. What is the defensive price action look like? Is the price action defending this level, right? That's sort of like the question that we all would love to be able to answer. And the way that I answer that is watching the candles and watching, and it's a little bit hard to say in the post-mortem, John, because really what is the key here is watching it live. Because if me and you watch this live together, we could see how a lot of these candles looked bearish, like they were going to break down, and got bought up. Looked bearish, got bought up. Looked bearish, got bought up, right? And we continued to see after, maybe 15 minutes of time that we just kept seeing buying step up as you came back down to that key inflection point. And so that's that is like the most important part of the break and retest. It's the break is what you're waiting for. You're waiting for the break. That sort of gets you interested, right? The retest is where you're still waiting. You're still waiting for the retest to happen. But then this, what I like to call the battle zone, the BZ, seeing what happens there, not anticipating by just taking an entry point, but watching those candles there is the key. Giving you an exact example of what price action or what candle I want to see is going to be difficult here on the live stream, but I can try to, I don't know, if you want to email me, John, email me at, actually, maybe Nick, we can actually reach out to you where you called, so we'll reach out to you. We'll give you an email, and I'll try to find some live examples, John, and I'll shoot you over some live videos of like real price action trading, and give you some like examples of what I think a strong holding retest would look like. How's that sound?
Yeah, that sounds great. I appreciate that. Thank you.
But does that at least help, like, sort of understanding what we need to be looking for and the retest and the price action at the retest level and not anticipating it? Is at least some value there for you?
Yeah, like right where you're there, I'm looking at that hammer candle, and then usually I wait for the next one to close. If it closes green and the third one starts taking off, that's usually where I'll try to get in.
Yep. As long as you see that area getting defended, you have your stop loss. That's what I'm looking for. I'm looking for attempts lower that fail, right? That's really, I'm looking for sellers to try to go back, break that level, gets bid back up. I'm looking for that interchange at those levels. And I think you can watch the 2 minute, you can watch the 5 minute, whatever time frame you like to watch. Everyone sort of likes a little bit of a different time frame. Some people like to look at the 1. I like the 2 probably the best. Like even after, let's say this candle right here, see this 2 minute candle, this sort of hammer candle right here. I like that candle there. After that candle, you can see a pretty nice continuation from that point. So hopefully that helps there, John.
It does. Thank you, Vince.
All right, man. Have a great rest of your night.
You also. Bye-bye.
All right. Yeah. A little bit difficult to do, but I hope that added value for John and the viewers. That one's a little bit difficult to do, like in this setting. I'm going to maybe come prepared with some live examples maybe in the future just to have ready to go when a question like that pops up. Right now, John. Wolf of Wall Street. Yep, you guys in the chat, right now, John. That is great. I need to have some. I'm so excited to expand the palette of things going on this live stream. I'm gonna have Stream Deck buttons that make noises, and maybe I'll have right now, John. Sayings that can pay my mortgage. It can pay your mortgage. Why don't we go ahead and lock in $2,000? How about we make it 3? All right, $3,000. My wife's gonna kill me. Thank you for a vote of confidence, and welcome to the Investor Center. I can't wait to do some of that. That's fun. Nick's already got he's working on a jingle for us. Nick, why don't you tell me that jingle real quick? I want you to say it. I want you to say it while I'm going to say it over the mic. Actually, you know what? Hold on. I want you to sing it. No. Should we bring Nick in and have him sing the jingle? All right. Tell me what it was, though. I'll sing it. When your trading's, what was it? When you're, when your trading's down and you're not feeling fine, call on in to the Trader Hotline. There you go. And then he has a cappella in the background. You don't have any more? Should we do one more? No, it's okay. All right, let's do that one. We're doing one more. Blueberries on all. We got a lot of insiders in this chat today, man. A lot of inside jokes, a lot of inside things going on. I love it. 300 people here. How many likes we got on the stream? We almost got everyone to press the like button. If you guys could, if you're enjoying this stream so far. Sorry about the technical difficulties in the beginning, but if you're enjoying it so far, press that like button for me. Subscribe to the channel. We should have everyone here being subscribed. You know, guys, Jules, a great question. Do Tory trend lines work? Well, first of all, Tory trades, the trend lines are not, patented. It's just a trend line, right? And it works for her, and I can't speak upon that. It's not what I trade. And I think a lot of people should. Here's my honest opinion, okay? Here's my take, right? Here's my take, let it be known. I think a lot of people should be stop worrying about what someone else does and try it for themselves. And if they like it, they should trade it. If they don't, they shouldn't. And they should stop caring about it, right? That's it. That's the end of story. Any successful human being would take that and say, yeah, that makes sense, right? Anyone. What's up, Eric? But Eric, okay, so that was a joke of a question. But hey, that is still the take, right? And I think that's a good take, Eric. I think we all just need to, whatever it is that someone else does online, whether you like the break and retest or not, whatever it might be, take a trade the strategy you like, try out different strategies. And if you like it, great. If you don't, then why spend your time talking about someone else, right? That's it. All right, Nick, what do we got? All right, so we got Seth coming on. This is a question about sizing up and scaling out. So let's see what Seth's got for us. Welcome to the Trader Hotline, sir.
Hey, Desi, how you doing?
Good, man. What's going on?
Nothing. First I want to say with everybody listening that I follow you every morning. I'm a part of your Monday, Tuesday, Thursday, Friday, and just watching the trades, following along. I use your levels every morning. I look it up. I'm up at 6 a.m.
Nice, man.
Just working on this stuff.
Yeah, put
so
in the
that
work.
I can be so that I can be prepared to not only follow along but also work my own trades and follow some of yours.
Yep.
And it's an amazing service. It's 100% paid for itself, totally worth it.
Appreciate that.
So,
Seth. Thank you.
Absolutely, you're awesome. So the question I have is, I'm trading a medium account, and what I'm getting into a trade, I'm sizing up. I'm using contracts, say 10 contracts. So I'm not looking at how much those are worth. I'm just sizing it like 10 contracts, and I'm trying to look for where I'm scaling. So, I watch you in the morning, and I watch, you usually, exit out of a certain percentage of what you've currently got in play. And then the second tier, you'll exit out of, another tranche. Yep. And then you'll leave a couple of runners. And that's where I'm kind of looking for the strategy, is how to scale out and maybe even at some point scale back in. But how do you scale out to a point where you're just leaving runners?
Got it. So first off, Seth, thanks for calling, and thanks for those nice words about what we do. Second, I want you to make sure you're paying attention to what the contract values are. So when you're buying 10 contracts, I need you to pay attention to what that's actually worth. Because, I think in extreme examples, then, I think you probably do look at them like you're not going to trade a $10 contract the same that you're going to trade a $2 contract. So as long as you can say that, okay, yeah. So we have that. I'm just making sure I have that ground covered because there's a big difference between that. But anyways, let's say that.
I'm not trading $20 contracts.
Right.
$10.
Yeah. So let's just say you buy 10 and you're comfortable with the equity position. So what I like to do, Seth, here's what I like to do, okay? And I can very easily talk through my strategy because, once again, it's something that I try to follow every day. I like to front load my risk. And so I like to put my full size that I'm willing to take in the beginning of the trade. Now, the reason I do this is because where I'm taking a position is where I think that it should start to work. And if it doesn't start to work at that particular point, then I no longer believe that the trade is valid, right? That's just theoretically and through my mind and just sort of mentally how I think about it. So if I'm about to take a position, then I better be taking a position at where I think it better start working right away, or at least very close to this area within some kind of a margin, which is, let's say, my stop loss, right? Let's say it's $1 below or a previous day low or whatever it might be. Hey, I like it to start moving off this level. If it does, then this is what I want my trade to be. If it doesn't and it breaks below this spot, then that's where I take my loss, right? But if I'm going to be looking to take a trade and the reason, and I'm happy to take risk at that point, then why not put the total amount of your position that you're willing to take at that point right there? Because at that point, if your mind is saying, hey, I like this trade here to go higher, then we should be taking, in my opinion, the most risk that we're willing to take at that point because it's the lowest amount of risk. If it goes higher from that point and we put more size on, then we're adding risk, right? If we're going to take a position at X and it goes up to Y, our stop loss is still under X. And so if we're adding higher and we're adding to a position higher, I still want my stop loss to be down back there, right? Down at that original spot. So I like to front load my risk. Now, the reason and how this helps me with scaling out is if I'm front loading my risk at that key inflection point, by the time, let's say, someone is adding to their position when it's maybe up 20%, let's say the option premium's up 20%, I'm taking half off. And so here's my mentality for doing this. Now, this has been a very, I've had a lot of questions about doing this, and here's my reasoning, okay? Getting half off at 20% may limit my upside potential because I'm taking a pretty large portion of my position up that, let's say 20% is roughly where I'll take that first tranche, as you probably have seen me do pretty robotically when you watch me trade live. If I'm up that 15-20%, bam, half off every single time. This caps my upside, it limits my upside, but it also greatly limits my risk, right? So we all know as traders that the market loves to reverse out of nowhere, just random reversals, especially in the market that we've seen lately. And so if I can grab that 20%, it's much higher of a percent chance for a contract to run to 20% than, let's say, to 100%, right? If you could run that statistic over the last, let's say, 5 years, what's the percent chance that this contract goes at least 20% higher versus 100% higher in a particular day? I would say 20%, moves on an intraday are much more likely than it to continue and run to that, big 100% move. So if I can catch that 20% move with with my full size, I want to take some risk off there, because once I take that risk off of 20%, if it does reverse on me, then I only have half of my equity in that position left. What this does for me is it allows me to relax, because I know, okay, I've gotten 20% off, or I've gotten half size off of 20%. If this does reverse on me from this point, I have less money in this trade and I have realized profit in my pocket. And if it does reverse, let's say it goes back to break even and I cut the rest off break even, then I've netted that 20% gain, right? Or let's say it goes to my stop loss, then it's probably padding that loss quite a bit, right? Because I've realized, let's say, $500, and then on the remaining of position, I lost $600. So net, I've lost $100, where maybe I would have lost $800, right? So I got 20%. That's all it went. It reversed on me. Why not take that win, right? Why not limit our downside risk? So taking that half off of 20%, it limits my upside, but it also greatly limits my downside, which I love. And for me as a trader, I would 100% every single day of the week limit my upside, and I would 100% any day of the week limit my downside risk, right? I'd rather be someone that is making less but never losing large, because that, in my opinion, is sustainable, right? If I can make less than the next guy, but when I lose, it's always less than that guy, That to me is the person that I want to be as a trader, right? That's the mentality that I want to continue to trade with. So that's sort of the mindset behind it, right? Now, from that point, it becomes a little bit discretionary, okay? From that point, Seth, I'm either targeting a next level, right? So while I'm in the trade, I'm looking at the chart. I'm looking at, okay, I got this next high. Maybe we broke above Tuesday's highs, but then I got Monday's highs about a point higher, right, Seth? So that would then be my next target. So I'd say, all right, I got half off, up my 20%. I'm going to now target Tuesday's highs, which is maybe a point and a half higher. If I get to that point, I'll take another half off, right? And then if I get higher, I'll take another half off, right? And I'm sort of using key levels on the intraday, but also a little bit of discretion, right? Now, where does that little bit of discretion come from? Well, let's say we're moving higher and the NASDAQ starts to fail a very key supply level, right? I'm long Tesla. NASDAQ's up into key supply. NASDAQ starts to reject. Maybe you say, hey, I don't like that NASDAQ rejection. Let me take this trade off, because if that NASDAQ starts to fail, Tesla's going to fail as well. Now, that doesn't always happen, but that's a larger majority of the time. So after that first initial scale out, which is always automatic, right? That part of the system, always automatic. Get that first 20% in the pocket, take that win, limit your downside risk. Then let's see if we can run this thing. And then we're sort of using some discretion in terms of key levels and price action to then run that out. The 9 EMA, the EMA Cloud is a great tool. VWAP's a great tool in a trending market, right? Just looking at where those realistic next targets would be based on the chart. How's that?
Got it. That's great. So it sounds to me like first key level is 20%, scale out 50%, and then every key level above that, you're scaling out 50% of the position you've got left.
Pretty much, yeah. So if I'm going from 10, then I'm going to 5, then let's say I'm going to, so I'd probably from 10 to 5, I'd go down to 3, so I'd take 2 off next, then I'd take 1 off, right? And then I would just try to get to like 1 or 2 contracts and see if I can just forget about them and see if they can keep running. At that point, it's money in the bank. If it fails with 2 contracts from 10, you're not going to lose. It's impossible. I mean, you'd have to, even if it went to 0, you'd still be green. So you're sort of sitting in, you're just sitting in, you're playing with the bank's money at that point. You're playing with the house money. So I like to be in that position. That's the position I love to be in. I got house money. I've locked in more than what I have left in this position. I have 2 contracts worth $500. I have realized gains of $1,500. So if this thing goes to 0, which it's not, I literally cannot lose anymore. And let's see what this can do, right? That's what I like to do. I think a few things before you go, Seth. Number 1, always have targets in terms of the key levels, okay? Like, we always look at the key levels. Make sure you know where you're targeting. But at least if you get that initial push in your favor, take something off the top, reduce your risk, and then see if you can reach those targets. And the reason I do that, like I said, I'd rather be a small loser and a small winner than a big winner and a big loser. That's just how I think it's, I think that's the right way. I think that's a sustainable way. So hopefully that answered your question tonight, Seth.
Yeah, that was great. Thanks, Desi.
All right, man. Have a great night.
You too.
All right. That is going to be our show tonight, guys. I appreciate everyone that showed up. Appreciate you guys being a part of the first inaugural live stream. I want to get Nick on the line. I want you guys to hear Nick. So, Nick, I'm going to put you on. How about you just say something to the chat real quick? Just so you know who's the man behind the scenes talking to you guys. Hold on one second. You there, Nick? Nick's just not going to respond, is he? Nick? He's not. He's probably purposely not coming onto the Discord. Oh. Oh. Hold on, you're not on yet. Now you are.
What's up, guys? Thanks for coming out, joining the first one. We're really excited about it. Everyone coming with the good questions. I know some people were saying, I didn't get to their call. We had a lot of calls come in. I'm one guy, and Vince is one guy. So keep sending them. If you didn't get it this week, come back next week, and I'm sure at some point you'll get on. So thanks, guys.
All right, Nick. Appreciate it, man. All right, guys. So that's the man behind the scenes. You guys probably know him. He goes by Options Insider Nick. He's the one that I say every single time, hey, Desi, cancel my membership. I hate, I can't stand you anymore, right? When you get those Timmies and Jimmies that come through, I say, hey, how about you email Nick? Or maybe it's something good. Like, hey, Desi, I got something good. Hey, can you just email Nick for me? Nick, I'm not going to say the email, all right? Because me and Nick already have a lot of, me pushing everyone. Yeah, look, he's smiling in pain right now on the chat. Carmine, appreciate you showing up, man. Thanks for sticking around. I'm shocked you're still here. I appreciate it. I guess it was, did this sustain your, were we able to sustain your attention today? How about that? Answer that in the chat. Is this something that sort of keeps you locked in? Am I a good host? What can we work on? Maybe what are some things that can be done between the calls? Make sure to reach out to us. We probably should set up a new email for this. Actually, I do have an email for this. It's actually, okay, hold on. Actually, you know what? I'm not ready to give out the email yet because I don't want to get spammed. But so it looks like, okay, it looks like it was able to sustain the attention because I know attention spans these days are very low. So cool concept. Yeah. Where's Chris Jones? We got to get Chris Jones on. We got Ty in here. What's up, Ty? We got Chef. What's up, Chef? This is going to blow you up. I hope so, man. I don't see why it wouldn't. This is better than Oprah Winfrey. All right, guys. Well, I hope you have a fantastic rest of your night. Thank you for being part of the Trader Hotline. We need strippers? Yeah, maybe we do. You're probably right. Shit. You're probably right. Hide the kids. Hide the kids. Doc. What's up, Doc? Man. I miss Doc. I really do. I miss you, Doc. All right, guys. Again, I hope this shows you that we can all converse as human beings. I'm just another guy who's done pretty well for himself trading. I'm not the best trader out there. I'm not the, best of the best. I make mistakes. I do things wrong. But I am truthful to what I'd say. I go to sleep without lies. I go to sleep, very comfortably at the end of the night. You love me or hate me, I'm just being myself, and I've shared every second of my journey online, and hopefully this, hopefully that is what, makes us win long term, right? I think that's the way to live, and yeah, we're going to continue to do it. So hope you guys have a fantastic night. Thanks for joining the Trader Hotline. Until next time. This is your host, Vincent Desiano. It's so weird to say that, but I'll see you guys next Monday. Peace and love.